It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First off, let's look at what's happening in the markets. We see oil prices drop sharply today after reports that U.S. President Joe Biden is considering the release of up to 180 million barrels from the country's strategic petroleum reserve. Biden is set to give remarks later today, with multiple outlets reporting the plan to cool soaring crude prices involve the release of around 1 million barrels of oil per day for several months. International benchmark Brent crude futures for May fell around 4% to $108.85 per barrel, while pairing earlier losses see U.S. crude futures for May delivery slid around 4.7% to $102.77 per barrel. See, gasoline prices have surged to record highs on Russia's invasion of Ukraine and subsequent supply concerns driving spikes in inflation across the global economy. And back here, the House of Representatives ad hoc committee on unclaimed 1.3 trillion naira federal government funds says it has discovered 300 billion naira hanging in 4 banks. Chairman of the committee, Yime Dem, stated this after an investigative hearing with some of the MDAs and commercial banks. The committee is also threatening to issue a warrant of arrest on MDs of banks, as well as the heads of the MDAs who have still refused to appear before it. Take a listen.
So far, we have discovered about almost 300 billion as at yesterday, but we are still scrutinizing the documents submitted so far, and I'm quite sure by the time we are done with this assignment, we might exceed the target given to us by the leadership of the House of Representatives. And let me also use this opportunity to reiterate here that those banks, those commercial banks that have not shown appearance since yesterday that we commenced this public hearing, and they have not submitted their documents, by virtue of our powers as the Parliament, if we expect, I think we are expecting them by tomorrow and Tuesday, those that have not submitted. If they default on those days, and MDAs as well, if they default on bringing those documents, submission and appearance, we don't have a choice than to invoke our powers as the Parliament and then sanction them accordingly.
Quite interesting. We'll keep tracking that story there. Now to our first conversation, we see global central bankers are having to deal with rising inflation due to expansionary monetary policies adopted to support economies. Now, most central bankers are turning hawkish as inflation is becoming more persistent. How would all of these impact investor returns? We have Gbolahan Aina, Managing Director, Cordros Asset Management Limited, joining us on the program. Good morning. Great to have you.
Good morning, Ladi. Thanks for having me today.
Following the ravaging impact of COVID-19 on the global space, 2021 was dominated by dovish stance, among global central bankers. And this is, analysts were warning that time that it could lead to, inflation, and we're actually seeing that happen now. So the pattern we've seen so far, where do you see inflation in 2022?
Okay, thank you, Ladi. And you're right. Inflation has been on the uptrend and is globally coming from a COVID-19 period where a lot of central banks had a dovish stance. But fast forward, we've seen inflation at record high. For instance, in the UK, we saw inflation reach 6.2% in February. It rose by 70 basis points. And of course, that's the highest since March 1992. In US, for instance, we saw inflation move by 0.8% month on month. And the year-on-year inflation got to 7.9%. And really, that's like a 40-year high as well. And of course, Nigeria is not immune from this. We've seen inflation in Nigeria also gone to record high. But by and large, we've seen a lot of central banks having hawkish stance. For instance, we saw the Bank of England, they increased rates 3 consecutive times to 0.75% as of now. Also for the FOMC as well, they also increased their benchmark interest rate as well. But in Nigeria for this year, we think quite a number of factors are going to affect what happens in the inflation environment. One is the currency, one is PMS. Of course, for the PMS, we don't expect there to be a deregulation. And we all know that next year is an election year, so it's very critical, or it's very important for Nigeria. So we don't expect them to increase PMS price. But within the currency, we think food inflation as well. Those are things that are going to have significant impact on inflation. But from our own end, we think on the best case scenario, inflation is going to settle about 13.5% on the average for this year.
Well, despite the level of recovery that we've seen since 2021, the outbreak of the Russia-Ukraine war, has no doubt put a dent on the optimism, about a sustainable recovery for 2022. In what way do you think this war would impact, most economies around the world?
Well, that's a very good question. And of course, everybody's seeing the effects of the war. And that's why the fact that are not either in Ukraine or Russia. We are seeing the effect in higher diesel prices. Of course, PMS prices have gone up, but because there's subsidy on it. I like the way the IMF managing director put it. She said that we live in a more shock-prone world. In the past, they used to say that when America sneezes, the world catches cold. But now this is not American sneezing. This is Ukraine and Russia. And of course, it's pneumonia, if I'll put it that way. So the effect is impact. So apart from the economic impact, there's the humanitarian impact as well. We see significant loss of lives. We've seen a lot of refugees moving from Ukraine, moving to neighboring countries. As at 29th of March, the estimate is that about 4 million people have moved from Ukraine to neighboring countries. We're also going to see impact in terms of prices, commodity prices. We all know that Russia and Ukraine, they control about 30% of wheat production in the world. So of course, we are seeing the impact in rising costs of wheat. We are seeing the impact in rising costs of gas and fuel. Nigeria would have seen significant impact in PMS. Of course, there's subsidy, like I mentioned. And I think another thing to mention is that we're going to see a lower business confidence level. And we're going to see, and this is going to weigh in on asset prices. And this is going to potentially spur capital outflows from emerging markets. So really the impact is massive. Russia, for instance, Russia is the third largest oil producer, and they produce about over 10 million barrels per day. Nigeria just has about 1.5 million barrels per day. So you can see how humongous that is. So for a lot of policy watchers, policymakers, for instance, so it's quite a delicate period for them. So they need to try to maintain a delicate balance between either hiking rates or trying to spur economic growth. So we're going to see slower growth for a lot of economy. We would have seen a lot of increase in growth, but what is costing, we are seeing slower growth. We are seeing disposable income reduced because you have to pay much more for things on the shelf, pay much more for gas, pay much more for gasoline. So for people, for individuals, it's going to be lower disposable income. For the economy, for instance, it's going to be slower growth. And we're going to see a lot of mobility in terms of refugees moving from the war-prone or war-torn Ukraine to neighboring states. And of course, it's going to affect supply chain. There's going to be supply chain disruptions as well, because for a lot of neighboring countries that do business with Ukraine, trade with Ukraine and Russia, for instance, we've seen a lot of sanctions that the developed economy or the Western world have imposed on Russia. And of course, a lot of those sanctions is also going to impact on emerging markets and other people that Russia has trade flows with. So I think it's going to be significant. And but there are dialogues going on, conversation going on, and we are hoping that this can be resolved as soon as possible.
Yeah, quite interesting. We've seen a couple of central bankers actually raise rates, at this point. And, I'm wondering, okay, you raise rates, to curb inflation, increasing, borrowing costs, for most of these businesses. But at the end of the day, these businesses can also raise prices to meet up with the rising borrowing costs. So how does this work?
Yeah, so it's quite difficult, to be quite honest. And like I said, there needs to be a delicate balance in, are you going to curtail inflation or are you going to ensure economic growth? Usually where countries want to really curtail or spur growth, of course, they bring down rates. But of course, we don't see them bringing down rates. We've seen where inflation levels are. We saw the record for UK, for US. UK, this is the highest since March 1992. For US, this is a 14-year high. So rates are at record high levels at the moment. So we don't see them increasing rates. But I think they also definitely they can also bring down rates for obvious reasons, because it's also going to be counterproductive because of where inflation is. So I think there's going to be a delicate balance, and I think rather than seeing a lot of successive rate hikes, it might be in lesser succession, and it might not be as significant magnitude as we would have expected. In Nigeria, for instance, at the last MPC meeting, they maintained status quo, and of course, they mentioned that inflation was a pain, inflation was a challenge, but of course, the fact that the economy still needed to grow. They're also trying to weigh or look at the impacts of the war between Ukraine and Russia on the economy. So while the logical thing is to raise interest rates, but of course, they can't do it just like that. There needs to be a delicate balance to see which one should get superiority. But you're right, I do agree with you that there needs to be a delicate balance between raising rates and also controlling inflation, and also trying to ensure that you don't hurt the economy, you don't hurt the man down the street, you don't hurt businesses. Because when you raise rates, for instance, that means businesses have to borrow at a higher cost, and that higher cost definitely is going to transit to consumers. It's going to transit to demand, it's going to the shelf to pick up things. So there needs to be that delicate balance, and I think that's what Nigeria Central Bank have been doing in the last couple of MPC meetings that they've been having.
Right. And, we've seen, inflation has led to a massive reduction in investor returns. Most investors are interested in possible strategies that would help them achieve, their desired returns. So I'm wondering, how do investors actually balance all of this?
Okay, so this is like a pretty tough time to really navigate, to be quite honest, because few assets are giving you real return, positive real return on an inflation-adjusted basis. If you look at where the Treasury bill yield is, although for the last auction yesterday, it went up to about 4.4% for the 1 year, but the last auction was 4%. So these are really record low levels. If you look at where inflation rate is at 15.7, Treasury bill at 4%. So that's like a negative 11% return. Fixed deposit rates with bank, they are all single digits, less than 10%. The NSE share index have done about 9.8% year to date. So in terms of return, really limited options are available. But there are some asset classes that give you inflation edge, and I think that's where investors should be pitching their tents. If you are trying to hedge against inflation, you need to look at those asset classes that can give you an inflation edge. And one of such is commodities. So while commodities prices have gone up, just imagine an investor in a commodity futures or a commodity index, for instance, you'd be smiling to the bank, and really you can purchase commodities like gold, like ETF, gold ETF, and can actually buy the underlying. So we've seen people, maybe they buy gold now and they're able to sell it maybe months down the line, or maybe years down the line. So commodities is usually a safe haven when there's volatility in markets. So you can buy gold. I think under safe haven or anything that can give you an inflation edge is real estate. And sometimes real estate requires huge capital. So while not everybody can play in the real estate space, rental income or rental yield in Nigeria is quite low, to be quite honest, it's about 5-6%. But with development, if you are doing a developmental project, you can gain as much as 40% on north of that. So if you have that muscle to do development projects or do a JV, you can, I think that will give you an inflation edge, because as prices of things are increasing, that price is also filtered into whatever price you sell your property. And of course, for people that can build properties on their own, they can buy a REITs. Historically, REITs in Nigeria have not done too well, but you can buy a foreign REIT, for instance. Those also give you inflation edge. And of course, currencies. We've seen the Naira to dollar exchange rate over time. So while I'm not asking people to go and speculate on dollar, people get remittances, for instance, who get paid in dollars. Those sort of funds can either go into a dollar mutual fund, and that gives you like a twin benefits. There's benefits of inflation or a currency edge, and also benefits of return. So you earn return on your investment, and you also get a currency edge. So I'll say commodity, I'll say real estate, I'll say currency. And for equities, not all equities, so you need to be selective in what you buy. You need to look at the fundamentals, and you can always speak to an advisor if you're not too sure what to buy. But at the moment, money market wouldn't give you an inflation edge. But likes of commodities, real estate, equities, and currency can help you hedge against the eroding effects of inflation on your investments.
Yeah, and talking about hedging against inflation and the option of commodities. We've seen commodities actually commodity prices be quite volatile. Because of the war in Ukraine, and we've seen most of these commodities actually hit new highs. At this point, so I'm wondering, at this time, are the entries still good for commodities?
But so now is a quite volatile period. But there are some other commodities. So might not be oil. There are different sort of commodities. There's gold. Usually in terms of volatility, gold is usually like a safe haven. Prices are usually quite stable. Even when you see a lot of volatility in oil prices, you see gold being stable. There are also some other commodities that people can buy. So you can buy a commodity ETF, for instance, and that's rather than thinking or wondering what to buy, you can buy an ETF that really mirrors a particular commodity. But you're right, commodity is volatile, but it gives you that inflation edge as well. But in investment, I think what is important is one needs to determine how long you're investing for. So what is your investment horizon? What sort of risk can you take? And how long do you want to invest for? But I would say always speak to an advisor, and they will direct you, advise you appropriately. Because sometimes in periods of market volatility, it can be quite confusing in knowing what exactly to buy.
Yeah, quite interesting times. Not finding the right entry into this market. But one of the major drivers of inflation globally has been the rising cost of energy. But regardless, Nigeria's inflation has remained high, even in times of low crude oil prices. What is Codris's prediction, in terms of inflation for 2022?
Okay, so we looked at inflation in terms of what are the factors affecting inflation in Nigeria. So one is the security challenges, and that has really affected farm produce, it has affected transportation. We looked at currency pressure in Nigeria as well. Looked at the electricity tariff hike. That is being done gradually. Of course, that's going to impact on a lot of things because most manufacturers, electricity is a major component of their outputs. We also look at the market determined price of PMS. Like I just said earlier, we don't expect that to change. We still expect government to maintain the subsidy. And of course, the FS supply constraints that weighs in on manufacturers, that weighs in on producers of goods and services. And that's usually translated to whatever price they give the consumers. So on our base case expectation, we expect inflation to settle around 13.5% for the year. For our bull case, and for our bull case means that we don't expect them to be higher in electricity tariff. We expect the ironing windows to remain at 415. We expect the FX supply to improve. We expect inflation to come lower. It's about 12.95%, but really, this is more or less wishful thinking because a lot of these scenarios might not really come to play. Some of them might come to play, which is the fact that PMS price will remain at 165, but we still expect that we are going to have some FS constraints. The bear case is where things really get really bad and really high in electricity tariff, and we expect the R&E window to be depreciated to about 460 to $1, and PMS price to go to 330. And based on our modeling, we see inflation starting at 16.57%. But we are tilted more to the base case, which is at 13.55% for this year, 2022.
All right. Well, we'll keep watching.
It's on the back of the base effect.
All right. Well, we'll keep watching how risk assets play out in 2022. Quite interesting times. Thank you so much, Golan, Managing Director, Codris Asset Management. Thank you for coming on the program.
Thank you, Larry, for having me. Have a great day.
You too. All right, so after the break, commodities market update is next. Do stay with us. This is Business Morning. Welcome back. So the Joint Technical Committee of the Organization of Petroleum Exporting Countries revised its estimates for oil supply and demand for this year ahead of the OPEC and non-OPEC ministerial meeting, at the meeting of the JTC, which was held yesterday to examine developments in the oil market and relevant trends. OPEC Secretary General Mohamed Bakindo projected that world oil demand will grow by around 4.2 million barrels per day in 2022 to 100.9 million barrels per day, exceeding pre-pandemic levels. Do take a listen. All right, we'll get that track later on now, but we have Lawrence Messi right here joining us in the studio. Lawrence, good morning. Great to have you.
It's great to be here.
Yeah, so quite an interesting projection there. We're seeing quite optimistic, 4.2 million barrels per day in 2022. How do you see this?
Well, to be honest, yeah, you're right. It's quite optimistic. I mean, with everything that's happening, Russia is the second largest exporter of oil in the world, behind Saudi Arabia. And due to the war, we're seeing projections of about losing 3 million barrels per day from Russia. So, I mean, that increase of 4 million might be a bit optimistic. But now let's look at another angle. Like we said on Tuesday, countries are not meeting their quotas. Other members of OPEC are not willing or complicit to increasing their supply. So increasing by $4.2 million barrels per day is quite ambitious. I'll use that word. If you're talking about non-OPEC members like the US or maybe even China, then you could say that, okay, they would have a standing, especially considering that President Biden yesterday did allude to the fact that they would release about 180 million barrels in the coming months from the strategic petroleum reserves. So if you look at it from that angle, then yes, that's fine. But from the OPEC perspective, I really don't believe that it's in their short-term interest to increase production in such a way that will lower prices, because in the short term, it does favor OPEC for prices to remain elevated.
Quite interesting. Now, talking about prices, we're seeing quite a pullback this morning. What's happening there?
Well, the pullback you're seeing is actually also due to Biden's statement yesterday of increasing the reserves. So I mean, 180 million barrels over the coming months. It's quite heavy, even though it will not actually meet the deficit demand in the market, but it will serve to stabilize prices. So basically, a free market economy is one that responds to information, and it does so effectively. So upon the break of this news by President Biden, the markets reacted, and we've seen the benchmark Brent reduced to about $109 per barrel. We've seen the West Texas Intermediate, WTI for short, reduced to about $102 per barrel. And
right.
these two benchmark crude oils, rather, we can see that they've responded effectively to market information. And what I can say basically is that if the US goes ahead with this strategic response, then we might be seeing a bit of easing in oil prices, well, in the short term, but I don't expect it to have a significant dampening effect. I think oil will still maybe hover around that $100 benchmark at least.
At least $100.
Yeah.
Nothing below $100. I don't know. I see a lot of volatility in that market, and anything can happen, at this point. But so let's bring it back here now. Talking about FAC allocations, we're seeing, there's a marginal increase there, and salaries are being cut, in some states. This is not a good time to cut salaries.
It's not at all, actually. It's the worst possible time to cut salaries. So to give some context, the FAC has increased marginally to about 590 billion naira, and some states, maybe to just name it, just a few, the Kogi is rationing some salaries, local government salaries in Gombe are also being rationed, also as well in Niger. Well, we'll not go into all the states that are rationing salaries, but it's the worst possible time because, as we said, the world over the past 2 decades, this is a statement made by Farid Zakaria, has focused on economic growth, has worked in tandem with market economics, that's doing the best for economic growth, economic development, and better standards of living. But now we're in a period where political interests seem to be a bit more concentrated, and so we're seeing a deviation from that trend. And that's why, well, the effect of the war and now the FAC as well. So basically, we're seeing a harder standard of living for people currently, and it all goes back to what people can do with what they have. So cutting salaries right now with increasing wheat, increasing corn, possibly cocoa as well. Maybe you could also mention rice as well, and higher inflation, higher diesel costs, higher transport costs. Queues are beginning to emerge again, which shows that there's a sign of another fuel scarcity again. So this, you're pushing more people into poverty essentially,
Right.
and I think that that's just not what people need right now.
And we're seeing rising prices, inflation going up at this point. And I'm wondering, is a wage hike, is that an option?
A wage hike, a wage
Wouldn't
hike.
that stoke inflation even more?
A wage hike. First, you have to look at a couple of things, right? You have to look at whether there's the financial capacity to even undertake a wage hike right now. You have to look at the brunt of negotiations that's going to take place between the unions and the government and how long that's going to take. And we saw the last time when they revised the minimum wage to about 33. I think there was a period where federal government or public service workers were not going to work. A wage hike right now is, to me, I think it would just be like a political bombshell, to be honest.
Right.
And in terms of inflation, um, you're right, it could stoke some more inflationary trends, but then the issue is the wage hike might not even cover the standard of living. Let's try and personalize this again. If the wage hike takes it to about, what, 40,000 naira or from 33, the man on the street wants to get rice. Rice is at, what, 32. He has to send his children to school, pay school fees. They're also increasing as well. He has to buy other food stuff, other commodities, lotion, um, house cleaning equipment. All of these are increasing because of increased chemical costs globally, and they're all being imported. Increased fertilizer costs for other food products. So wage hike doesn't really solve anyone's problems, to be honest.
Maybe it should have been a long time coming for the wage hike.
Uh,
Maybe timing is the issue there.
yeah, and I think a wage hike is more or less, you're just putting plaster on the wound.
Right.
You're not actually treating the wound.
the
So,
problem.
so there needs to be a more structural reform to ensure that prices come down, employment is available, before you can now consider a wage hike. That will now actually have impact on people's lives.
Right, and talking about rising prices, the month of March has been quite eventful. We've seen diesel skyrocket to, a new high. So what are your expectations for the figures for March?
Well, I mean, it's based on the facts and evidence that we have with us. Diesel is what doubled. It's, like I said, emerging fuel scarcity as it seems anymore. As it seems, grain prices, corn, wheat, cocoa as well, possibly, all increasing. And second, we've also seen interest rates in developed economies, the US, European Central Bank, all increase. So I really do believe that with all these factors, increasing energy costs, that we're seeing a lot of cost push inflation, because this doesn't just stop at these commodities. These commodities are being used to produce more goods and services in the economy. We're talking about fertilizer. It's used to plant almost everything. So we're seeing across-board increase in food prices. then these raw materials, as it were, for industries, let's look at flour mills, the Honeywell, that's going to turn this into what? Semovita, that's going to turn this into flour for baking. So we're seeing what? Bread, confectionaries, everything.
That means manufacturers and consumers have a lot to
Think
with, at this
exactly
point.
a lot to them. And then we now talk about administrative costs, diesel to run generators. I believe that the March figures will be higher, based on expectation and evidence. And then we look at the MPC coming up, that the Monetary Policy Committee meeting coming up in May. You can expect that they might as well also hike the interest rates, as well as a strategy to combat inflation. But we wait to see what happens.
We wait to see, and obviously, every central banker is turning hawkish at this point. But I'm wondering, is that really the answer? Is that really going to solve this inflation problem? That's my last guess. And
well, it could, but then I'll just give you an insight. I gave you one aspect of it on Tuesday. I'm going to give you another aspect now. Last week I said when interest rates increase, it reduces your ability to go and borrow money, and there's less money in circulation. Now let's look at it. You have money, you want to spend it on food or new phone, new watch, whatever. What is your incentive to not spend on that new phone? Is if someone tells you, put it in the bank and you get XYZ interest rates. If XYZ increases by maybe 20 basis points, you have more incentive to put that money in the bank. In economics, we call this the marginal propensity to save. So what that means is that for every 1 naira that you have, you're saving, let's say, 20%. If your marginal propensity to save increases, then it means you're saving more and you're consuming less. So that's another aspect, that interest rates affect consumers' disposable income. That's the money they have to use. So when you save more money, there's less money in circulation, and then producers will be forced to bring down their prices so that they can now incentivize customers to remove the money to come and buy more goods. So that's also another aspect of how increasing interest rates work. But there's a structural issue with the Nigerian economy. People are excluded from the financial sector. It's what we call financial inclusion and exclusion. So monetary policies cannot really affect. Now let's take it back to perspective. The common man that's selling, there's Misha Indomie on the road, he has no business with interest rates. His business is what? I want to clothe myself, I want to sleep, and I want to eat. You're telling him 20%. What is his business? How much does he make that he's looking for 20%? So people are excluded from the financial sector. Get these people bank accounts, but don't stop there. Let them use these accounts. Let them have access to finance, credit, loans, whatever. Maybe turn that Mishai business into an actual registered business. And then you can actually see what a monetary policy will do on a much larger scale. Right now, monetary policy only affects maybe banks and the high net worth and you and I who save money, or the person on the street whose main focus is what am I going to eat tonight, does not care about interest. So it won't really work. It only work among institutional investors and the likes. Well, the other issue is there's a lot of money out of circulation, people in demand for dollars and whatnot. That's going out of circulation, taxation as well. All of these factors all speak to the structure of the Nigerian financial system, which impedes monetary policies from even working.
Right.
And I don't even want to go into the fiscal aspect of it. Do you increase rates? The fiscal authority will increase taxes. How does that work? It doesn't work. They're not commensurate.
Settle the exclusion issue, then we can now see the impact of monetary policy. Quite interesting, but I see something's happened with cocoa. The prices of cocoa, we see in Edo it rose, but it's falling in Ondo and Abia.
Yeah.
Quite interesting.
So actually, the cocoa farmers, the Cocoa Farmer Association of Nigeria, is actually has a long-term goal to overtake Ivory Coast and Ghana as leading producers of cocoa in the world in the next 5 years. But in terms of states specifically, the prices are rising in Edo because of the lower production, because of the drier season. which has seen lower yields. And now that we're expecting some rains to come and the yields are improving, the prices are rising. While in Ondo and Abia, it's kind of remained flat across the week, declined. And some other states like Cross River, Oshun, that the prices have also remained flat. But the main reason for this is basically the yield of the cocoa and the expectation of better fruits coming as we exit the planting season and enter the rainy season.
All right. Well, we'll keep tracking to see how all of that play out. Thank you so much, Lawrence Messi, analyst, Financial Derivatives Company. Always great to talk to you. And we'll dig in more on commodities next week. Thank you.
Thank you.
All right, now, so let's take a look at what's happening with the markets. We have Ini right there with the information. Hello, Ini. Good morning.
Good morning, Laddie. Thank you. Welcome to the Markets Corner. Now, I'm happy to say that for the first time, trading session this week closed positive. There you go. Not so much of a red, right? So the all-share index was up yesterday, 0.13%. Equities cap was also up. And this is all thanks to majorly MTN, among others. MTN drove the market yesterday. You know, when MTN goes up, it does about 10%. So you can only imagine what 10% did to the market there. And going to the activity chart there, it's, well, still in the red, a lot of them, but value at least was up. That's where the money is. That's where we should be looking at. Value was up yesterday, and it's at 2.62 billion naira. That's at least an increase there. And then when we go to the sectors, drilling down to the sectors, we see that the banking sector, well, has had a lot of persisting profit taking over time. We saw Zenith has been very in front of the investors. There's been a lot of profit taking on Zenith. Consumer goods also, and industrial goods was down also yesterday. Insurance, oil and gas, Seplat, those are major, but you know, insurance is also, thank God, in the positive. And that's basically what happened in the equities market yesterday. And we see that ETI was the most traded by volume, mostly profit taking there. That's why we see that it was in the sector, that's the banking sector, was in the red. And then performance across, of course, we see was mixed. But, you know, in how many days that we'll be having positive market breadth? And then I'm sure you will try to understand having a positive market breadth and yet the market ending in the negative. Laddie, I wonder what you're doing about, about that. Yeah. But at least we are in the green at this time. That's one good thing.
It's quite interesting, you know, seeing that, you know, we're having a green movement yesterday, and investors must be, you know, cherry picking at this point. The analyst yesterday said, you know, most of these stocks are at record lows, you know, at this point.
Yes, and then, you know, we talked about having two sets of investors at this time. There's one group doing the
profit taking,
and then the other group watching to see when they are done. Well, we will be able to get into the market and make the most of this time. I'm sure we still have that group watching out for today to see how the market will close today, and then they'll be able to make their decision. But we have Phil Anigwe now joining us to give us what he thinks. Yesterday, MTN did very well, drove the market to the green, among others. Hello, Phil. Good morning.
Yeah, good morning. Nice to have you here. Nice for you to have me today.
Yes, we're happy to have you to Phil. So apart from MTN, what else drove the market into the bullish area yesterday?
Well, we think that the market performance was largely a reflection of the activities of onshore investors. Was principally driven by onshore investors, particularly non-institutional. They were key to the performance of the market yesterday. We did see scanty interest from foreigners. I think foreign flows were very light, but then the onshore investors actually covered some ground. For foreign flows, they were particularly interested in MTN, which has actually reached its all-time high. I think it was about 210 yesterday after appreciating by 1.45%. So I think for markets, it's partly reactions to previous numbers releases and positioning in key stocks that are expected to post decent audited results, particularly in the for the companies that are yet to release. We did see UBA appreciate by 0.65% as well.
All right, Phil, it would be interesting to know why we had a loss in Cadbury, but I'll just leave that because we're almost out of time. What's your outlook? How do you see the market closing today?
Yeah, we think that the market, we will see still cherry picking in a few names and profit taking in some names that have recently experienced some gains. You did mention Cadbury, and Cadbury, like many other consumer names, are actually negatively viewed because of the potential impact of high commodity prices on their margins. So that may be one of the reasons people are a bit shy of consumer names like Cadbury.
All right, Phil Anigbe, research analyst, Cardinal Stone Security. Thank you so much for sharing your thoughts with us. Ladi, I think it's time for a break.
All right, now we'll take a quick break. When we come back, we'll drill on the fixed income space. That's in a moment. Just stay with us. Welcome back. We still have Ini right there with information for the fixed income market. How's it looking, Ini?
Well, yesterday the Treasury bills market was a bit bearish, at least tilted to that direction. But let's get the details now. The federal government bond yesterday had 23 deals, and the most favored, you had about 10 billion naira for both the July 2030 and the November 2028. I have to tell you, yesterday, all eyes were on the PMA result, and I think we'll have our analysts tell us more about that. In the Treasury bills, only 6 deals there. I don't know if we have Caleb Alimi joining us now to tell us what's the result. I think that's where every attention is on. Hello, Caleb. Good morning.
Hi, good morning, Nini.
Yeah, so tell us about that result we've all been waiting for since yesterday.
Okay, thank you. Very interesting result yesterday. I think worthy of note is to say that the one-year paper, gained about 45 basis points from the last stock rate. The last auction closed at 4%, but this one closed at 4.45%. We can also see that investors are beginning to demand higher rates as liquidity continues to thin out from the market. The last auction, the stock rates for the 91 days and the 182 days remains largely unchanged, but the biggest move, like I said before, came in the one-year paper, where we could also see from the range of bids. The former range of bids was between 3.49 to 6%, but this one, the range of bids was between 3.3 to 7.99%. So we could see that investors are beginning to push that upper band to something higher, as the government is expected to continue to borrow more, and then liquidity is also expected to continue to thin out from the market, and that's why we've seen that huge jump. The reaction in the secondary market is the same. The market is bearish. We expect that secondary market buyers will also continue to demand higher rates across the curve. This is something we've anticipated, and so it's not necessarily a surprising move.
Okay, so are we still looking forward to the yield expanding more?
Yes, like I said, it depends on how liquidity continues to tighten. And the month of April is not as liquid as the month of April marks the beginning of Q2. And then in Q2, we've all looked at it to say anticipation for liquidity is actually smaller than what we saw in Q1. So that would also lead to further yield expansion.
Anything that can boost liquidity, you see? We've had FAC, so...
Yeah, I mean, aside the federal government allocations, to be what we call the state government support, which they call bridge facilities, that will come sometime towards the end of April again for the state governments. Those are the two main factors that will boost liquidity. OMO maturities in the month of April are actually few and far between. I think just a total of about around 70 to 80 billion compared to what we had every month of Q1, where we had an average of, say, 200 billion maturing. From 200 to 50 billion maturity in each month in Q1 to just around 70, 80 billion in April, and then it continues to dwindle from there. So liquidity really is going to get tighter and tighter. Okay,
so that means we should be expecting a lull in the market at this time, at least until April.
Correct.
All right, Caleb, thank you.
April.
All right. Thank you so much, Caleb Alimi. Thank you for sharing your thoughts with us this morning.
Thank you. Cheers.
So just before I hand over to Ladi, let's see what happened in the OMO. Remember that I guess Caleb just talked about. We're expecting some maturity in OMO. That's December 2022. July, a whole lot coming out from there, which should boost some liquidity in the market, at least at those times, July 1st and, of course, December. And they're still very active in the market, as we can see. Then next year, we have for January, not too far away, you know, and then August also for this year. So that's why the OMO is one place to look out for, because in a couple of months, it's going to release some liquidity into the market. Only 23 deals yesterday, valued at 58.1. So the NSD OTC market yesterday was also active and ended in the positive, almost like the equity, 0.13%. A market cap still inching very close to ₦1 trillion. We hope to report that right here very soon. We do hope to report that, Ladi.
Quite interesting. In every investor they're looking out to beat inflation at this point, and watching all eyes on those yields and the market, and all eyes on April. Maybe April will be better, you know, for the market.
That's with the fact, and we always have to wait for the federal government before things move in the market. Not very good, but I mean, that's where we are at the moment.
All right, Nii, thank you so much for the update. Okay, let's drill down on more markets now. We're seeing, let's take a look at the crypto market. We see Fair Greed Index at this point standing at 52 points. That's neutral. At this point, it's not fear, it's not greed, it's neutral at this point. Market cap, $2.15 trillion. That's up by 0.14%. And volume traded in the total crypto space, we've seen a bit of a pullback this morning. It's down by 7.65%, and Bitcoin dominance 41.59%. Let's look at the price of Bitcoin at 8 a.m. this morning. It was $47,120. You see the price started a minor downside correction after it failed near the 48,200 level. We see Bitcoin corrected low and traded below the $47,800 mark this morning, and we'll see that's another support level to watch for that 47K. There was also a move below the Fibonacci retracement level, upward move from the 44,469 swing. Let's look at the price of Ethereum now. We see that's trading at $3,401. It's about 0.06%, and we see volume traded in Ethereum, $14.45 billion for Ethereum. Top alt by market cap. We see BNB topping that counter. All right, let's bring in Bjorn Martens now, CEO of Passive Income Token. Hello, Bjorn. Good morning.
How are you doing?
Yeah, great to have you, Bjorn. Well, it's still about that hack there for the Axie Infinity owner. We saw the Ronin blockchain there. That's the underlying blockchain for the popular game. That's Axie Infinity. We saw it got hacked. And I'm wondering, you know, you're a player in that space. You know, how do you protect your blockchain from the hackers?
How do you protect your blockchain from the hackers is honestly a little bit difficult. You need to easily update yourself, be audited, and make sure it's a safe connection everywhere. So yeah, how do you make sure your blockchain is safe? Keep developing, keep improving. But blockchains as Solana, but now also again Ronin, they all get exploits and they all get attacked once in a while, as there will always be open things in the blockchain itself. How you can protect yourself really good is making use of a hardware wallet, a multi-signature wallet, anti-extra VPN, a security system, etc.
Right, quite a lot of things you need there to protect the blockchain. But how does this, you know, translate to, you know, users of that blockchain? You know, when these exploits happen, you know, are the users at loss too at this point?
It's decentralized finance, so the users are responsible for their own doings in this space. So when the money is gone, the money is gone. There's no insurance where you can get the money back from. So yeah, the loss is a loss in this space in general. The lucky thing is that, for example, Axie Infinity has been able to track the funds, and very likely they're not going to be able to be transferred outside of crypto in general. So it will probably get back to the Axie Infinity users at the end.
Quite interesting. Not easy being your own bank, with crypto, with this decentralized nature of crypto. But we're seeing, Bitcoin, make new highs at this point. How are you seeing the market?
This is something I've been, shouting for the last couple of months as well, that we had a big dip in the end of 2021, and we're really seeing the positive vibes again of the start of the year. April's coming in, everybody's very positive around it. We haven't seen any crazy increases yet. We're steadily growing, and it's really preparing for a hot summer, I expect.
All right, Bjorn, always great to talk to you. We'll see how most of these developers actually protect from hackers at this point, because that's also on the increase, with global tension at this point. Thank you so much, Bjorn Matt. It's always great to talk to you.
Thank you so much, Larry. Have a good day. Bye-bye.
You too. All right. So now let's look at the top ultimate market cap. We see BNB there was up about 2.51%. It's quite positive, on that counter, even though we see Bitcoin having quite a pullback this morning. We see Solana there up about 9.39%. Solana is doing really well. It was below $100 just about a week ago, but now we're seeing it there at $122.64 per coin, and we're seeing XRP there 86 cents. And that's up about 0.43%. All right, that's it on the crypto space, and that's it for the show today. Thank you so much for watching. Do remember to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. I'm Ladi Williams. Thanks for watching. Bye-bye.